Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, October 4th, and just got a couple economic news releases scheduled for today, starting with the weekly jobless claims. Last week, we had a reporting of about 363,000 people applying for unemployment. We figured it would go up, have a slight uptick, about 370, and it came in at 367. So not quite as far as expectations or forecast, but it did come in a little higher this week. Another item to note is the factory orders for August. So back in July, we had orders were jumped up about 2.6% back in July. We figured that will show some contraction for August to about maybe negative 5.9, and it came close, 5.2. So it's pretty close to where the forecast is. And then later today, we're going to have about 11 o'clock Pacific Coast time. We're going to have the Fed minutes being released from their last meeting, and that could be definitely a market mover if there's any surprises in there. So be prepared after 11 o'clock Pacific Standard Time or 2 o'clock East Coast time. Any volatility in the markets as the minutes will be released, and we get more of an insight as to what the Fed presidents were discussing for Fed board members. So. And then don't forget also tomorrow we have the big jobs number tomorrow. So that would be the big mover probably this week would be tomorrow for the Bureau of Labor Statistics will be releasing their numbers for jobs. So that's what will be this week for jobs. Let's go over to the headline news here. And today the stock market's pretty much up, but then I believe it's S&P's down a little bit, but everybody the others are up. So part of what we saw there, the economic news releases, they have Draghi had their ECB had their meetings, and Draghi came out and basically said that they're ready to purchase government bonds from the different countries. So for that, so of course they're kind of rallying behind that, but basically the country has to formally go to them, ask for that help, and they got a lot of restrictions. So a lot of countries don't want to, due to those restrictions, abide to the terms of the agreement of them purchasing their bonds. So there's a lot of speculation that Spain will, but so far they haven't. Again, there's a lot of very strict regulations that go behind it. So a lot of countries are very apprehensive about going to the ECB and requesting a bit more or less the bailout. All right, so unless they have to, don't expect them just to kind of jump in there and start asking to be bailed out on there. Now we'll go over to the bond market and see what we got with the interest rates. As you can see here, we got a little bit lower level here, which means interest rates have the pricing for interest rates crept up a little bit. We had the red, which means downward trend. I hope if we can keep this within this range here, we can probably still continue this little longward trend here, as we've had a couple of dips and upwards, and now we're kind of going down again. So it's possible we could have a downward trend again. So we just need to kind of hold tight here. Jobs will be the big thing tomorrow. If there's any surprise in the Feds, we could have some volatility in the market this afternoon. All right, folks, thanks for stopping by. Certainly appreciate your support, and I will see you guys tomorrow. If you guys like these videos, I encourage you to stop by mikesdailymarketreport.com. You can subscribe there, and every time I upload every morning, you have them sent to your email box, and then you can review. Have a wonderful day. See you again tomorrow.